Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi, along with my co-host Emily Parker, CoinDesk's Executive Director of Global Content. Let's take a look at what's going on in the markets this morning. The CoinDesk Bitcoin price XBX index is at 24,890. Bitcoin is below $25,000 for the first time in a month. Of course, yesterday we heard that the Fed is going to hold off on a rate hike, but that said, two more are coming later this year, shortly after, probably about 2 hours later. The price of Bitcoin took a plunge. Let's see what's happening in Ether. The CoinDesk Ether price ETX index is at 1,636, also the lowest it's been in a month, following the same trend as Bitcoin. Let's see if there's any difference in the DeFi markets. The DFX, CoinDesk's DeFi index, is at 90.14, down more than 4%, and I believe down 16% in the past month. Emily, it's wonderful to see you this morning.
Great to see you too, Jen.
All right, so some news that we were expecting, but regardless, big news this morning. Miami Mayor Francis Suarez has filed paperwork to run for president. The Bitcoin-friendly politician has vowed to make Miami a crypto hub and has accepted his salary in Bitcoin. Emily, what's your reaction to this news this morning?
Well, so he's definitely probably the most aggressively pro-Bitcoin of the presidential candidates. But what's interesting is how much crypto is appearing already in this sort of presidential campaign. So we have a few candidates who are talking about crypto or digital currency. Robert F. Kennedy Jr. talks about it. DeSantis is banning CBDCs. So there's a lot of action happening in Florida. He's trying to ban CBDCs in Florida. Ramaswamy as well also, has a position on crypto. So it's interesting. I mean, it's interesting that this is becoming a topic. But yes, I don't think there's anyone as bullish as Suarez in the race so far. So.
Yeah, so many candidates that are really using crypto as part of their political campaign. It will be interesting to see what happens. And, Suarez wanted to make Miami a Bitcoin city. Maybe if Suarez won the election, we would have some regulatory clarity, but we can only speculate. All right.
Well, there is a Bitcoin bull, so we'd have that, I guess.
Exactly.
So
we would have a Bitcoin
become a national symbol.
Exactly. Not only for the people of Miami, but for all American citizens.
And the world. Yeah.
And the world. Emily, I love it. All right. Let's welcome our first guest here. We have Stuart Alderoty, Chief Legal Officer at Ripple. He's now calling for an investigation after the release of the much anticipated Hinman documents earlier this week. Welcome to the show, Stuart.
Oh, happy to be here. Thank you.
We are happy to have you. So first, before we dive deep into this, let's take a step back for anyone who might have missed what's going on, who might not been following the news. Explain to us what the Hinman documents are and why this was an important piece of the case against Ripple.
Sure. So I'm just sort of go back to square one very quickly. In December of 2020, the SEC filed an enforcement action against Ripple, alleging that our distributions of a digital asset known as XRP should have been registered with the SEC as a security. In December of 2020, that may have, been, we may have felt that we were kind of alone on an island on that, but fast forward to 2023, and I think everybody understands that this is an incredibly important policy issue that needs to be resolved in the U.S. But we have fought the SEC, and we have fought them very hard because we believe they're wrong. And if the policymakers are not going to stand up and give us a policy solution, we're going to have to turn to the courts to get that solution. And we fought to get internal emails and communications at the SEC about their thinking on this topic. And the seminal speech that was given in 2018 by the former director of corporation finance, Bill Hinman, where he announced that a digital asset can morph from a security to a non-security based on a standard that he had made up. We now have uncovered internal discussions within the SEC before that speech was given. And what we have learned is that Bill Hinman was told by senior officials at the SEC, their own general counsel and their head of trading and markets, among others, that his speech was not following the law, that he was making things up. He would create greater confusion in an already confused market, and he was exposing a regulatory gap that the SEC probably didn't have the power to fill. And the SEC has taken that speech, they've touted that speech, it's still on their website today, and they've weaponized it to bring a series of enforcement actions and trying through regulation by enforcement, we now know, to really destroy and disrupt this crypto economy in the United States.
Stuart, is this what you expected to uncover in these documents?
Yeah, now we have seen, we got access to these documents last year, and the judge has seen them. The new news here is the judge on her seventh court order relating to these documents said that the public deserves to see these documents. But yes, this corroborates a number of very important, relevant things, or things that are relevant to our case. One, that when the law is faithfully applied, when you faithfully apply the statute in the famous 1946 Supreme Court case known as Howey, the SEC has no case. Two, it confirms that the SEC fostered regulatory confusion in the marketplace. They knew the marketplace was confused, and they took steps to deliberately aggravate that confusion. And I think that goes to what's known as the fair notice defense, that folks of ordinary intelligence did not have fair notice about how the SEC was going to apply what they believe to be the law to this industry. And lastly, we shouldn't forget that in addition to suing Ripple, the SEC in December of 2020, I think, as a last-ditch effort to bring maximum leverage on the company, sued our founder and our CEO personally, alleging that they were reckless in allowing Ripple to distribute the digital asset XRP in the way they did. And to establish recklessness, you have to prove that the individual either knew or recklessly disregarded what the law was. And we've now confirmed that that is an outrageous allegation, because at best, the SEC were debating internally what the law was. At worst, they knew what the law was, and they distorted the law to create this confusion in the marketplace.
So, Stuart, the reaction to this has been somewhat mixed. Not the market isn't entirely seeing these documents as like the smoking gun that it might be perceived as. And I've seen some comments on Twitter saying, "Oh, this doesn't really prove anything. This is not, this doesn't really change anything." And then the price of XRP, which I know you're not here to comment on, but still hasn't reacted that positively to just this reveal. What are the critics missing here? I mean, why do you think that's happening? Why are people not kind of seeing the significance of these documents in the same way that Ripple sees them?
Yeah, look, I think these documents are a bit of a Rorschach test. I think people will look at them and want to find what they want to find. What I'm most concerned with is, what does the court think? What does the judge think? And we don't know what the judge ultimately will think, but we do know that the judge believes that these documents are relevant to the case, which is why she compelled the SEC to produce them in the first case. And we know that she felt it was important for the public to see these documents because she considers these documents what's known as judicial documents, documents that she will likely rely on or refer to when she writes her decision. So that's what's important to us.
On the topic of the critics, critics have long argued that Ethereum and XRP are comparably decentralized. It's like that's a debatable argument. What's your response to those critics?
The XRP ledger is open, permissionless, decentralized. It has always been. So that is not at issue. I think what is at issue is whether the concept of decentralization is a technological standard, which I believe it is, rather than a legal standard that the SEC tried to make it to be. And I think the reason they tried to make decentralization a legal standard is because they find the legal standard to be inconvenient. They find it inconvenient to have to prove a contract for an investment. They find it inconvenient to have to prove a common enterprise. They even find it inconvenient to have to prove that somebody actually invested money as opposed to digital assets being given or granted. So I think decentralization as a technological standard is an important discussion for the industry to have, and the XRP ledger, under any definition of decentralization, is decentralized. As a legal standard, I think we need to faithfully apply the law.
So, Stuart, in a way, Ripple was kind of a pioneer in this sort of battle against the SEC. Now you have a lot of comrades, kind of a lot of tokens are being, targeted by the SEC. Are you seeing any? I'm just curious. Are any of these projects reaching out to you? Is there any kind of collaboration? People asking for advice? Are you seeing any kind of unity here now that there are so many tokens that might soon be facing similar situations?
I think that's a great point. As I said, in December of 2020, when we were sued a couple of days before Christmas, so a really nice, personal touch from the SEC, we said from day one that we were going to defend this case, not only on our own behalf, but we were going to defend this case on behalf of the entire crypto industry in the United States. I'm not sure everyone believed us in December of 2020, and some were outspoken and said they didn't believe us in December of 2020. As I said, in sitting here in June of 2023, everyone believes us. Everyone understands how important this fight is. And in many ways, Ripple, in a perverse way, we've actually been benefited by the SEC suing us when they did, because we're at the end of our journey and others are at the beginning of their litigation journey with the SEC. But I think if you look at the defenses and the narrative around what some of the actors who are now on the wrong side of the V with the SEC, they are reading from the Ripple playbook, and that is perfectly fine with us.
Well, on that topic, we must bring up the two recent lawsuits that we've been talking about for the last 2 weeks, the SEC versus Coinbase and Binance. You're expecting a result in your case, I think, by the end of September. How do you think that the result of the Ripple case or even the revelation of the Hinman documents might be of aid to Coinbase or Binance as they fight their own legal battle?
Look, I think transparency is an important thing. I think that it is really disheartening as a lawyer, as an American, that we have a regulatory agency that is fighting so hard to hide the truth. And in using, again, deliberate creation of confusion and chaos as a weapon. They weaponize regulation by enforcement. So anything that can shine a bright light on the SEC's tactics here, I think is a very good thing. I think exposing that the SEC themselves identified a regulatory gap in the space that they themselves understood they probably didn't have the authority to fill is a really important revelation. People forget sometimes that these agencies only have the power that is granted to them by Congress, and they answer to Congress. They can't create law. They have to apply the law, and they have to apply the law faithfully, and the SEC has woefully failed to do that. So I think that will give other industry players that now find themselves in a courtroom with the SEC a leg up to start with. And obviously, the substantive application of the law is very, very important. And as we get clarity in the courts, I think the knock-on effects of that will prove to be beneficial to others who find themselves in this position.
So, Stuart, one interesting data point here, which I think not that many Americans know, or I mean, I'm sure the XRP fans know, but just like how big XRP is in overseas markets, right? Like, I mean, Korea and Japan, I mean, there's just huge communities there. And so I guess my question for you is, has Ripple run into any legal problems in any country outside of the United States? I mean, or is it really just the US that you're dealing with this question? Because, I mean, XRP is all over the world.
It is just the US. There's only one country in the world, and in fact, there's only one regulator in one country in the world that has ever suggested that XRP should be registered as a security, and that's the SEC in the United States of America. No other country has taken that position. In fact, other countries have affirmatively taken the opposite position. We have over 800 employees at Ripple. They are dispersed throughout the world, not only in the US, but in Singapore, in London, in Ireland, in Brazil, in Dubai. In all of those jurisdictions, we work very closely with regulatory agencies, getting appropriate licenses, getting appropriate regulatory oversight over our business, which, as you know, is to facilitate cross-border payments for financial institutions and banks. So our customers are enterprise, not retail. And what those regulators are concerned with are consumer protection, protecting the integrity of the market, and doing our best to keep bad actors out of this industry. And they're creating regulatory frameworks where those important goals can be accomplished without crushing the innovation and technology that underlies the industry. Unfortunately, in the US, this regulator under this leadership, and actually under the prior leadership, is hell-bent on destroying this crypto economy. So what's going to happen? And we're seeing it. And over the past 2.5 years, we've been forced to grow our business outside of the U.S. And our most successful 2 years in our 10-year history as a company has come in the last 2 years. And all of that growth has come outside of the U.S. And I think others are starting to learn their lesson. And we're starting to see this technology, this innovation, this entrepreneurial, the entrepreneurs that back it, tax dollars, jobs, all of that is going to leave the U.S. And I think, we need to wake up, because it's 2023, and 10 or 15 years from now, we're going to probably see the bring the crypto back to the U.S. Act, like we've just seen with the CHIPS Act. We're losing an incredible opportunity here. The U.S. is a leader, and we're not only, I don't think we're losing our leadership position, I think we've lost our leadership position.
Stuart, thank you very much for joining us this morning and providing that insight into your case.
Great. Happy. Thank you. Happy to join you.
That was Stuart Alderoty, Chief Legal Officer at Ripple. We're going to take a short break, and when we come back, we'll take a look at how the markets are reacting as the Fed pauses rates.
We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, especially housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation.
That was Federal Reserve Chair Jerome Powell after announcing it would pause on raising rates for the first time after 10 consecutive hikes over 15 months. Now let's dive into the crypto markets with Bob Iaccino, co-founder and chief market strategist of Path Trading Partners. Welcome to the show, Bob.
Good morning. How are you?
We are doing just fantastic this morning. We're talking about the Federal Reserve. Yesterday, they also indicated that they would resume raising rates later in the year. Talk to us about how the market digested this. What are we seeing this morning?
Well, to be honest, I don't think, Jennifer, that the market's actually digested this yet, because it's one of the stranger decisions I've ever seen. Essentially, if I were paraphrasing, I'd say, yeah, we're not doing it now, but we're doing it later. And I don't really understand that, because what that signals to the markets is that there's a strong chance, despite the verbiage that said there's not a strong chance, that they won't do this later. When you looked at the summary of economic projections, the SEP, basically the majority of Fed members had another 50 basis points in this year. And I don't know why you pause or skip, as Bowman said, why you pause or skip if you're going to do it again. It seems to me to be more consistent, maybe do 25 and then sort of signal to the market there's another 25. But this particular Fed has said repeatedly, and Jerome Powell said at the beginning of his first term, that he wants to be more communicative and he wants to be more clear. And this couldn't be any more the opposite of that than to basically say, we're done, but we're not done.
So you don't, I was seeing a little bit of panic this morning. Like people are like, oh, this is the beginning of the end. I mean, people are always saying that. People are always saying all sorts of stuff. But I don't know. You're not super worried about, prices just tanking this summer?
No, I think the word crisis is overused. I mean, we just had a regional banking crisis, yet it was over in basically 10 days. And so I think the word crisis is overused. When you look at what the Fed has done, most people in my position think there's a 12 to 18 month lag time from where the Fed rate hikes actually take effect in the real economy. I'm not talking about the stock market. I don't care about the stock market in this particular context. But we talk about 12 to 18 months. That means we've only got about 100, 125 basis points that are currently affecting the market if it were a time-released sort of hiking cycle. Otherwise, we could potentially still be 3 or 4 months away from the bulk of these rate hikes actually hitting the economy. So if the Fed is waiting for these long and variable lags, as Milton Friedman called them, then you're talking about them not needing to do any more, in the very least, because we are seeing softening in the overall economy. I mean, you can see it very clearly in everywhere but the labor markets, and I would argue that the labor markets are starting to show it as well. Tech is always the first sector to lay people off. When you start getting manufacturing and services layoffs, services are always last. When you look at what happened to wages, wages haven't really fallen at all. I just looked at the last batch of data, and the April data, the average hourly wage had been up about 6.4%, and in May it was 6.3%. And we don't have any data past that as of yet. But when you look at that, wages have not fallen. That likely means that people are going to spend. I was speaking to a friend of mine who owns a restaurant in Chicago, and he said his customers keep asking him when that $10 cheeseburger is coming back. I know, a $10 cheeseburger, right? But he said it's not.
Wait, is that a cheap cheeseburger or an expensive cheeseburger?
I also was like, I don't know. Is it cheap or expensive?
Well,
I'm trying to understand.
Now, because now the cheeseburger's $20, and he said I keep having to explain that the $10 cheeseburger is not coming back because the cooks that were making $18 are now making $25. And when wages go up, you don't go into your employees and say, by the way, things are coming down, so I'm going to pull back a little bit on that raise I gave you. It doesn't work that way.
Oh, that's interesting. We heard yesterday that the Fed's going to hold tight on the rates as they assess additional information to inform the next two rate hikes. What factors are they going to weigh when they're making these decisions, do you think?
Well, I think the number one will be the labor market in general. When you look at the trend in inflation, by the way, I always like to mention this. People think inflation is coming down. It's not. If you look at the last two sets of data, whichever one you want to pick, whether it's PCE, which the Fed looks at, or CPI, which everyone else looks at, you see that the month over month increases in prices, both core and headline, core being more important to the Fed, have not come down. They're flat. They're up 0.4%. Again, whichever one you look at, it's up 0.4. So people need to understand there's a difference between disinflation and deflation. Deflation means that the change in prices has a minus in front of it. We haven't seen that yet. So what you're seeing is a slower rate of growth of inflation. So based off of that, the Fed shouldn't be cutting rates. They might even need to do that extra 50 basis points. But they have a dual mandate. It's full employment and stable prices, somewhere in the range of a 2% increase in prices. Again, even their target is an increase in prices. So when you look at that and you see that we've gone from 3.4% unemployment to 3.7, the Chicago Fed lists full employment based on their research at 4.1. So there's still wiggle room there for the Fed to not only potentially raise rates, but to keep rates where they are for longer. Even if you had rates where the market is currently pricing them in at the end of 2024, which is somewhere in the range of 3.5% to 4.5%, depending on which markets you use to price it, you're still looking at the highest rates since 2008 for the Fed funds level. And there is a very large swath of people running companies now that were 17, 18 years old when that was the case. And I've never actually had to run a business with rates actually being high and money actually costing something. So there could be some worry there. And I think these kinds of things are exactly the reason you guys exist. When you have an activist Fed, whether it's here or somewhere else, that are doing other things besides just stabilizing the core currency, there's a need for decentralized currencies because of those actions.
And lastly, let's quickly hit on the crypto markets. We saw Bitcoin slip below 25K. Some analysts and traders are predicting that it could go lower based on price chart analyses. Where do you see the crypto markets going?
Well, I'm smiling because I kind of love what's going on, specifically with Bitcoin, which is really the main thing that I watch. It's the main thing that I'm invested in the crypto side of things. And for me, Bitcoin has held in. I don't care about these moves down to 20,000 or 19,000 or even 18,000. It would bother me if we got into 4 digits again. Then I would start to worry that the regulatory actions were getting aggressive and had teeth, because I think that's really the only thing that works. What I like seeing is, and this is for the asset itself, what I like seeing is the sort of undecided nature of the SEC, which illustrates more and more why Bitcoin specifically needs to survive. So I actually like Bitcoin here a lot. From a trading perspective, I have targets of about 31,700 and then to the upside, 35,120. So those are exactly where I'm looking for. I'm trading it now. I'm no longer investing in it. I have those core positions and I'm keeping them. So from my perspective, this is a really good time to be involved. Bitcoin's back above its 200-day moving average, likely to stay there in my opinion. But if it doesn't, you have a built-in stop level for traders. You have a built-in add level for the buy and hold crowd.
Bob, thank you very much for joining us this morning and giving us some insight into what's going on in the markets.
Good to see you both.
That was Bob Iaccino, co-founder and chief market strategist of Path Trading Partners. All right, we are going into a segment that I look forward to all week. We are going to be chatting with you, Emily, about the hype over AI and all the commotion around Apple's Vision Pro launch. AI and metaverse tokens are not looking so hot despite all of this chatter in the news. Talk to us about what's going on.
Yeah, so this segment is kind of about the lack of hype around AI tokens, at least for now. So as we've discussed on the show, there was a ton of hype around AI tokens, or so-called AI tokens, because as we know, it's become kind of a cliche that a lot of crypto people are pivoting into AI and a lot of the kind of previous crypto hype is going into AI. So there are a bunch of so-called AI tokens, some of which have more of a connection to AI than others. Now, as we can see here, we got a sea of red. This is not looking very good. And there's a bunch of possible reasons for this. Our colleague Eliza actually has an article out about this saying that, AI-related tokens lost as much as 25% of their value in June. And, the reason she points to is sort of the hype wearing off, the hype about NVIDIA wearing off, because there was a big boom around that, right? And that's kind of trying to settle. I think we did a segment earlier this year where we had AI tokens kind of booming, and that was because of ChatGPT. So it's possible just that it's part of the news cycle, and now some of that hype is wearing off, and so we're seeing a sea of red. And it might just have to do with larger market sentiments. The question is how long is this red period going to last? Are we going to just have to wait until there's some sort of new AI news boom to prop them up?
It's always so interesting in the crypto markets when we see tokens pump on news that actually have not a lot to do with the tokens, right? It comes to this causation versus correlation narrative. There's ChatGPT in the news and NVIDIA, like you brought up here, but these AI tokens, are totally different projects. I think it's always important to bring that up for the viewers at home.
Yes, or Elon Musk posts a photo of a dog and the dog coins go up. So yes,
exactly.
this is kind of how crypto works. So yeah.
All right, let's talk about the metaverse tokens. We saw some metaverse tokens mentioned in both the Binance and Coinbase lawsuits that the SEC brought against them. I believe Axie, Sand, Mana were all mentioned, and we've seen those tokens take a big plunge as well. What's going on there?
Yeah, so the metaverse tokens, we could look at this chart as well. Also a sea of red, not looking good. Now, there's a few possible reasons for this. Now, we've talked a lot on the show that, just the hype over the metaverse in general has been relatively muted. People have gotten a lot less excited about the metaverse recently. So that might be part of it. But I think, what's interesting about this is coming, after the sort of Apple launch of their headset, which is widely expensive, but is presumably a bet in the future of the metaverse. Now, as we talked about last week, Apple is not necessarily friendly to crypto or Web3. And in fact, our colleague Frederick just reported that Apple rejected a Bitcoin wallet Zeus, and they're fighting with Damus, which is a decentralized social network about Bitcoin payments. So, so maybe it's because, the Web3 community is sort of realizing that, Apple's launch isn't necessarily a crypto thing. But again, Jen, as you said, I think probably the fundamental thing here is that some of these metaverse tokens were named in the SEC suit. And I think that is likely having an impact on those specific tokens, like you said, Decentraland, Sandbox, et cetera.
And of course, we just spoke about markets with our markets guests. We took a look at the markets at the top of the show. It just seems like everything, including Bitcoin, is down right now. So a sea of red across the board.
Sea of red. Yep.
All right. Thanks, Emily. That was CoinDesk Executive Director of Global Content, Emily Parker. We're going to take a quick break. Next up, we are going to be chatting about bankrupt exchange Bittrex opening for customer withdrawals today. Chief Legal Officer is here to break down the details. Good morning and welcome back to First Mover. The U.S. arm of crypto exchange Bittrex is set to open for customer withdrawals today. It comes following a ruling by a Delaware bankruptcy court. Our first guest is Bittrex Chief Legal Officer David Maria. Welcome, David.
Good morning.
Let's talk about this. So in that ruling, the judge authorized Bittrex US to permit their customers holding undisputed, non-contingent, and liquidated claims to withdraw cryptocurrency assets and fiat currency. That was a quote. What else do US customers need to know about these withdrawals?
Well, we're hopeful that we'll open up today. It's going to happen. We're not sure exactly when all the engineering is going to be done, but it's going to open today. Notice is already going out to the customers by email. So anyone who has funds still on the exchange will have the opportunity, not just today, obviously, but until the end of August, to get back on, access their accounts, and withdraw the assets that they have in their accounts. They'll have to make sure that they have their passwords set, that they have their the appropriate information, ID verification, the rest of the KYC requirements. But if that's all in order, they'll be able to withdraw the assets without going through the formal bankruptcy claims process.
Go ahead, Jen.
Okay. The judgment doesn't determine who legally owns the assets or whether customer claims are favored over the government's. And there could be some clawbacks in the future. I think these were notable remarks in the story that came out this morning. Can you explain what that means?
So there was a back and forth. The government had some objections regarding the prioritization of these claims over their claims. So it was just negotiating the language, getting something out in front of the judge that the judge could agree to, that sort of reserved the rights of the government in the event there aren't enough assets to make them whole. Our priority all along was to make sure that customers were made whole. So even before filing for bankruptcy, we left the exchange open for a month after announcing that we were going to shut down. We were hopeful that everyone would get on then and withdraw what's in their accounts. For the people who haven't, we made this motion, which is, from what I understand, a relatively extraordinary form of relief in the bankruptcy court, but we pushed hard for it, as did our lawyers, and we're able to get this relief. So in terms of what it means in the long run, we as an exchange don't intend to try to claw anything back, but I guess it reserves the rights of the government to do so at the end of this if they're not made whole.
So what's next in the bankruptcy proceedings?
So in terms of how it affects customers, this period will happen over the next almost 2 months, I suppose, 6 weeks to 2 months in the end of August. For those folks who aren't able to get their credentials right, haven't provided the right information, there still will be the normal bankruptcy claims process. So anyone who was a customer or and other creditors, there's the website they can go to. It links from ours, and then they go through the formal claims process where they would file a claim with the bankruptcy court, and then ultimately the court decides the validity of those claims. So there are a couple tiers in order to make sure that customers can get the assets off the exchange.
We have to get your thoughts here. Bittrex faced charges from U.S. regulators claiming that it violated federal law by operating an unregistered securities exchange. We now see the SEC bringing cases against Coinbase and Binance. What are your thoughts on the regulatory outlook in the U.S.?
I won't get into too much detail about the merits of the claim. I listened earlier as Ripple's chief legal officer spoke. We agree with a lot of the positions they've taken. It's been a difficult road because we've tried to do everything the right way, and we continue to do so. The lack of guidance and the lack of regulatory clarity has been a huge problem, not just for the coin teams, but for the exchanges. There just wasn't any set guidance as to what the SEC's views were at that point. So everyone would have to take their best efforts to do what they thought was appropriate. And I think that's where we all are. And now everyone's getting charged. So it doesn't seem like an effective regulatory regime. And it really goes to the whole notion that everyone speaks about of regulation by enforcement, which other countries just don't do. And that's why it seems like a lot of exchanges are moving elsewhere to where they will be told what they can and can't do.
David, thank you very much for joining us this morning.
Thank you.
That was Bittrex Chief Legal Officer David Maria. That's it for First Mover. I'm Jen Sanasi. Thank you to my co-host, Emily Parker. Emily, thank you for that segment today. Like I said, it's always my favorite segment of the week.
Oh, it makes me very happy to hear that, Jen. Thank you.
First Mover returns tomorrow at 9 a.m. Eastern Time. Meanwhile, catch the hash today at noon. You're watching CoinDesk TV.